So many people here in person, and great that everybody is also joining in person, if I'm not mistaken. So a crowd of me as one moderator, and then 5 very great and distinguished panelists. We would like to continue the discussion on the infrastructure, on banking, basically, bank grade ready and enterprise ready infrastructure. And to kick off the discussion, I would say let's do a quick round of introduction. Maybe we start to my left, and it's really try to keep it short.
Yeah, thanks, Jonas. I'm Markus, I'm a principal with Define, and I have been working in the digital asset space since 6 years. So I had helped clients to build, say, the new kind of capital market infrastructure, and foremost, I focused on, say, bank-grade custody solutions. So I have a lot of clients with a license, also like with the design of target operating models, but also really with the implementation, really hands-on, even like implementing an HSM and these things. So I will hand over to Jürgen.
Jürgen Hofbauer, hi, and for those who weren't here before, I'm Global Head of Strategic Partnerships at Taurus. Taurus is an infrastructure provider for custody and tokenization, headquartered in Switzerland.
Thank you. And Stefano Bovo from PwC, Senior Manager. I'm working in the building up the consulting AML and compliance industry. Before that, I was actually in the industry working as an AML officer for Coinbase, another crypto institution. And I'll pass it over.
Yes, hi everyone. Alexis here from Elliptic. So Elliptic, you may have heard of. We're a blockchain analytics firm headquartered out of London. We've been doing effectively, well, for Coinbase, amongst others, crypto compliance solutions for the last 10 years. Most of my career at Elliptic has been actually working with our top accounts around the world. So hopefully I can bring in a little bit of perspective of what banking grade infrastructure looks like.
I'm Robert Materazzi, the CEO of Lukka, and we're also an infrastructure provider providing data and software solutions to risk-mature enterprises around the world, both a lot of the biggest banks, traditional banks, and crypto-native businesses, so really the full spectrum. And thanks for having me.
Great, yeah, thanks that everybody is part of this panel. I think really a lot of expertise. Also, thanks for keeping the intros pretty short so that we can, directly go to the exciting part to go into content. So the topic of the panel is banking grade digital asset infrastructure currently emerging? And the last question I would like to pose actually to all of you is, what does banking grade mean, right? So we also heard before enterprise ready, very nice terms, but what does this mean?
Yeah, maybe I can start here. Banking grade means, I would say, have maybe like 3 kind of aspects. So I think first of all, it's security. So I mean, security is, I think, the most crucial part. And there's a lot of experience in banks, so there's a lot of kind of like systems already in place which you can use and which you have to integrate with. But there's also like really requirements, say if you build a custody solution by itself, so you really have to say focus on things like end-to-end security, not only like in your say in your business processes, but even say if you develop things, you have to like adjust development processes. So the other part is, I would say, reliability and availability. So banks, they have really like frameworks, like BCM, business continuity management frameworks. They have risk assessment frameworks, and you have to really focus on that. And you have to really build like robust like backup and recovery processes for cryptographic material. And this is really important because you have to ensure that, say, in a disaster, your business is continuing. And so you put a lot of effort in that. And I would say the last aspect, so there's also like some experts here, is definitely compliance. So you have to build really like good compliance processes because there's already, say, processes and say systems within the bank, and you have to integrate with that. But you also have to add something because I also saw Elliptic here. So because you get like information from the outside, like from say like some chain, what's called like a chain forensic provider, adding information you wouldn't have say in traditional kind of systems.
So we started with banking grade, like 3 aspects: security, reliability, compliance. Is there anything else you would add to this list of banking grade or enterprise ready?
Yeah, I mean, I can just echo what he said. And I think when I read the title, I thought it was a great way to embrace all the products that can be put on the market. And of course, banking grade is a generic term, but it matches perfectly the variety you have available. The important part is to build strong key knowledge and the structure for building up then the processes. Of course, that's my field, so I am a little bit more tendent to start from AML and compliance, of course, but has to go along with the business. The problem, the difficulties are that there are so many fragmentation at the moment in terms of regulation and products that this could be actually challenging for every single institution that tries to offer a different type of product. I mean, from what I can see from the past years, as I said, I joined crypto like 4 or 5 years ago. It's going the right direction, especially in Germany. I think there is a strong will of having everything ruled and having things in the proper place, but this will take some time still. So I think building up like concepts that there are undeniable needed will start and generate then the right regulations, and that's what I can see so far. So maybe I can pass it over to the colleagues if they have something to add to that.
Maybe super quick. I think future-proofing to me, banking grade is also about future-proofing. I think it's a very fast-moving space. We're all here for that reason. And, not just in compliance, but I think in all fields, you've got new technology, you've got new challenges that arise. And a bank I think we always use banks as examples because banks make calculated decisions on who to work with, who to partner with, and they want those decisions to stick in the long term. So I think in addition to what the guy said, future-proofing is a key factor.
Yeah, maybe just to add to what everybody said, I'd say they need partners. I mean, they don't need a product that they can install or log into and then just take it by themselves. There's countless problems that we need to tackle with them jointly, and it starts with understanding their organization and how they contract, how they assess risk, and really foundationally. I mean, we've created our organization at Lukka in order to adapt to that, and that's very tricky, particularly when you start early, like a lot of the companies that are supporting this technology did, 5+ years ago now. It's you have to invest a lot of capital early that you don't get to benefit from short term, and so it also takes a lot of commitment. You have to think very long term when interacting with banks globally. So,
I think that was a very important point you made, Robert. Namely, that it's in the end it's a collaboration, right? So no bank really wants to do. I mean, maybe there are some, but I guess most of them don't want to do all the stuff by themselves, right? Because there are companies out there and startup solutions that were in the space maybe 5 or even 10 years longer, right? So they do have experience. So I think that's a good way. And also, it was important to get everybody on the same page because bank grade, it's no legal definition for that. So it's important to set the scene. Maybe turning to you, Jürgen, after establishing what bank grade means from an infrastructure perspective, what do you think, where are we today? Are we bank grade kind of everywhere, in Germany and Europe, or where are we on this transition to become bank grade in terms of digital assets?
So look, from a security point of view, I think the technology is absolutely there to make sure that assets are being kept safe. Where I see a little bit the risks is how do you implement those solutions, right? I touched on before around MPC versus HSM, so multi-party computation versus HSM solutions, which some people might want the newest and latest technology, but do they know operationally how to integrate it and handle that within their teams, right? How do you segregate it between teams, operations team, compliance teams, who's holding the shards, right? Or you go back and say, well, do you know how to handle HSMs? And you keep the seed phrase safe that way, and it integrates in certain things. So where are we today? Absolutely, I think technology is there that keeps it safe, right? The things we have seen, not just with banks, but more into digital asset providers across the globe that, maybe last year, which wasn't a great year, right, have seen some of the hacks coming. I mean, it's a cyber risk, right? And it's probably because it wasn't rightly, the governance wasn't there, the operation setup wasn't there. But that's what banks have been doing for 100+ years. So it's just a matter of moving that together, educating and building that out.
If I can chip in here, I mean, like, that's 100% correct. I mean, at least from my perspective, I think what is missing a little bit is this part where the banks get more involved and gain some experience, because some of the procedures and the measures that can be built needs to come from experience, because building up from based purely on theory sometimes doesn't work. It's a good start, but it needs to be used. And that's why I think the German regulator, or Germany in general, but now Europe, is doing a great job pushing it and saying, like, let's start with this framework. Let's see what you can do and how we can deal with this. And then once you start offering these products and generating this type of business, then let's build up together what could be the best measures. Because unfortunately, not all the, let's say, old banking measures can be applicable to the new digital assets. Some are, and that's a huge advantage. But there will be some gaps, and these gaps will be, for me, closed only with the time, and using experience as a tool to gap those. But otherwise, yeah, I 100% agree with that. Also, yeah, the knowledge is kind of building up lately. So yeah, I think that the two things are going up together.
Yeah, so maybe I can add to that. So I totally agree. So what I'm seeing is that, like, banks, they have now, with all these kind of custody technology, built a kind of, like, really secure governance layer. So they have gained a lot of experience with maybe some simple stuff like cryptocurrencies, but they now have, like, a core for digital assets to really securely, say, access their functionality. And they also have, in the process, I think, gained experience also with other processes, like, development processes, making it end-to-end secure, because it could be an attack vector. So I would say the core element, or the fundament for accessing digital assets exists, and a lot of services, say, in the future, can be built on top. It will be paid, maybe in the beginning, things like cryptocurrencies, but I think there will be a strong shift also, like, say, real-world assets, like crypto securities. I mean, we have the EVPG in Germany, and I think it's a huge driver, but it's much more work.
So we heard that's basically, technology seems to be there. It's now, about bringing the business component to that, establishing a good governance to, not have cybersecurity risks. And I would like to also deep dive a little bit more on the regulatory piece, because you also mentioned that this is required, of course. What do you think? Where do we stay here in terms of regulation? So, is also here, like, kind of all clear? So we just, need to implement the guidelines and then all good? Or is it a little bit, and of course, a little bit provoking, or is it a little bit more?
I mean, maybe to start the conversation, I think regulation is always a long-flowing river, I guess. I think certainly in Europe with MiCA, we've seen some really, really good direction. And in fact, I think it's benefited the industry more generally. In comparison, for example, at least Elliptic, when we're looking at our regions, the US has slowed down in the last 6 to 12 months because of regulatory troubles. And we've seen, obviously, the SEC making some public inquiries, and I think in Europe we're seeing some regulation really strengthening, and that is, it's a signaling thing as well, right? Like, it's that bringing that framework in. But when I say it's a long river, the US were the first to introduce crypto regulation in 2015 with FinCEN, and now they're facing these challenges. So I think it's all about dialogue, right? Like we mentioned, banking grade. Well, yeah, you need the regulation, but that regulation needs to evolve based on challenges, because not everything is plug and play. There will be some implementation challenges. So in our experience, where we've seen those regulations really working is when there is clear dialogue at a national level between, especially with European regulation, those that are putting in place the regulation, and the practitioners in the industry.
I'll maybe echo a lot of that. I mean, I'll be more direct about the U.S. regulators. It's very political right now. It's there's a lot of distractions, but there are a lot of good conversations going on outside of the press. So there are, I mean, there's, we saw a little bit of a spike, over the last 24 hours in conditions, all just really seeing a little bit of light at the end of the tunnel on all the ETF applications that are under review in the U.S. But I'd say it's safe to say that not a single framework in the world is complete or is final right now. But there's a lot of really, really good starts, and it's nice to see participants in a lot of countries around the world actually interacting with the regulators and trying to find a way to supervise this the right way. There's very little banning or making it illegal or all of the things that we saw maybe 5 years ago in various countries. And I think it's important to recognize the amount of participants that have changed roles over the last year as well. Maybe not necessarily by design, but due to economic conditions and a number of turnover and other things. But it's caused a full cycle of now where people, kind of like was mentioned earlier, that have rolled their sleeves up and actually worked in the industry are now back in traditional companies and now have expertise to actually make an impact. And we're seeing a lot more productive conversations. There's less innovation labs going on, and there's a lot more business units that are looking to drive revenue. And I think 2024, I'm pretty optimistic looking at it because I'm hoping that a lot of these different approvals will have finalized, and we'll see a lot more businesses actually launch because they've been working for a long time towards that goal. But we're going to learn a bunch of new issues with all of the frameworks once that happens, once all these businesses are live, right? So this is a precursor to that.
Maybe just one thing to add is, so regulation, and I worked 15 years in a bank as well, is never black and white, right? They don't come with a script and here you have to follow and then everything thumbs up and will be fine. It's very much a guidance, right? That's still what it needs. I've seen, to echo that, also in the UK, a lot of more interaction. The FCA bringing people in from a banking side, but also from a fintech side, just to understand it better. And I think that's really a very good first step. Why it sometimes has been slow is also, I mean, if you look very much in the past 10 years or so, like the banks that got it wrong in first place, it got very expensive for them. And the fines that have been handed out, US especially, but also other regulators, and the business case just doesn't add up, right? For new technology to jump straight in to get it wrong and get $1 billion of fine, it's just not there. So I think that, again, takes a bit of time.
I think just one last thing. I think it's very interesting to see, without getting into details, how also the difficulties are between the local regulation and the European regulation. So there are some discrepancies that needs to be fulfilled, and of course they will come, which is a good thing if we want to see it in this way. But on the other hand, to help companies to provide a compliant products, of course they put them in a spot where they have to pay attention to two different regulations. One is coming perhaps in 2-4 months. They don't know yet. One is already in force yet now. So these are also creating some questions and some frictions. But I think in a good way. And once this transitioning period will pass, then everything will be established and it will be easier also for the companies to navigate within the frameworks.
What I was also wondering on the regulatory side is, of course, and you said it, Robert, like regulation is evolving everywhere, and no country has like probably the perfect regulation in place where everything is set in stone. But you have some countries where they have a solid starting point, some they don't, where you is allowed to kind of do anything. But we do see kind of movements in every country. And what I'm asking myself is basically how to navigate this. So how to be aware of, if you're having maybe a product that is available on a global basis, how to check, what's going on in Asia and Europe and the US. Like, is there a secret you can share in terms of how to do this?
Maybe to start off again, look, there's certainly no secret recipe. I think, consultants have a big role to play in this and have that global view that's much needed. Certainly at Elliptic, we work with global customers that have been forced, I think, a little bit to do regulatory arbitrage and simply, run their business in places that are welcoming them by giving them. I think it's a balance between a transparent regulatory framework, but that's also achievable, right? I think where we've seen dark spots in the regulatory map is when either it's been banned or the bar's been set to such a high level that the cost requirements of running a business just don't apply. So I think we've seen in Japan, for example, a lot of new entrants coming in, and then the JFSA requirements were just so strict that they just, they invested for 2 years and then pulled out because it just simply didn't make business sense. So I think, if you're operating a global business, I think banks again here have a bit of a leg up because they've got presence in different countries. They've got relationships with regulators. They can get the news directly from the ground, but it's certainly a very, very difficult challenge that every global actor faces.
Perhaps if I can chip in here, I don't think that 100 years ago was easier for banks to set up a business in other countries. It just took time to go there. The problem here is that the product, crypto, or in general digital assets are meant to be internationally available at any time. So it just started with a strong basis saying like, I can be here and trading in Hong Kong in no time. So that's a little bit the complexity. But it's coming and we can learn from what we have. And I think, as you said, there's no secret recipe, but for sure there are measures and there are ways to fill the gaps. So I'm actually positive for that. And some organizations are already kind of chipping in. The FATFs already issued some guidelines. Europe, of course, US. I mean, like once all the major regulators have established some key points, then it will be also easier to spread across the world.
Maybe just add that it's, I mean, in my opinion, and I agree with everything, is collaboration, and it has to be in person. You can't do it remotely, and it's a weird dynamic right now with the post-COVID world where everyone's trying to figure out what it's normal like to work, are they remote or not? And you mix that with a lot of cultural just differences, and a lot of them will not build trust with you if you don't do it in person. And so I spend a lot of time traveling because we are a global company and we're opening up offices all over the world, and there's all kinds of challenges with that beyond helping our customers with crypto regulation. It's also just labor laws and all the jurisdictional processes and NDAs and where we're storing data, right, particularly in Europe, comes up every day. And so all of those different things working with our partners. So it's collaboration and building trust, I think, is key.
Yeah, just one thing to add. If you look at global banks or global customers we engage with as well, they all look at a specific country to focus on, right? So it's not like, oh, we want to be here and there. It's kind of like, where's kind of my sandbox that we can work in, right? And it could be Switzerland, it could be UK, but very much is like, take one and build it out from there.
Yeah, so that's kind of a key denominator also from the panel, that it needs collaboration, be it between the banks and tech providers, to service this, and also collaboration with the regulators. And as you mentioned, Robert, kind of in person. And I think that's also what we learn more and more. And great that you all here in person, because it's just different compared to online, even if it saves time if you do this in an online way. And maybe one last question before we can go maybe into some Q&A of the audience is to you, Marcus, and then maybe everybody can comment. Is zooming a little bit out, we talked about the technology seems to be pretty ready for regulation. We are getting there, but it's an iterative process, and it is no perfect setup there. And it's a complete different topic, but I was wondering, like, user experience is currently super important, right? So from people, be it B2B, be it B2C, they want perfectly easy solutions, and also adoption from lots of solutions did not, from my perspective, work out because user experience was not really satisfying the user. But that's like my my hypothesis. Would you agree, and would you say the user experience is also super important, or would you say well, it's an element, but yeah, there are more important stuff.
Something, what kind of, say, customer group you focus on. So, like, what I at least, say, observe in Germany is, like, say, banks in the custody space first look into, like, more, say, institutional or corporate clients, so where, say, UX or this kind of user experience is less important. But in general, I think it's really important, actually, to implement it if you're going more into the retail case. But I think, like, for the first use cases, it's maybe not in the focus. I mean, think security, I think it's much more important because, say, the investment you have to make in user experience is so much lower than, say, in security.
Maybe user experience, not looking at it right now from the end user, but from kind of like clients that we serve. What I think is important, and also part of my job is, we have parts of the solution, but there's others, Elliptic, Lukka, and so on. How can we ensure that we in front of the clients, that we have that seamlessly as well and integrated? Right? That's kind of what we can contribute. So from a client perspective, they don't have to run around and figure out what else they need. You already come kind of like prepared and say, well, this is the core what we offer, but here's what you also need to think about. And by the way, yes, we're integrated and that works. So it kind of like takes off a little bit the headache from potential clients.
And the last question, maybe as in kind of an outlook on this topic, what does it now need? So we talked about collaboration in person, also between banks, tech, and regulators, for example. We also talked about like education, but what does it take to make the sector enterprise ready? What's the important focus there should be? And this can be from the regulator for a bank, for a fintech, you decide. But what do you think needs to happen to get this enterprise readiness? And maybe we start with you, Markus, and everybody can quickly comment.
So the question is, what do you mean with enterprise readiness in this context here? So I think if you're offering a custody solution like to different, say, client groups, I mean, you have to provide really as a kind of, say, banking grade security if you want to have bigger tickets. So if you want to, say, include like corporates or, say, asset managers or something, you have to have a really kind of secure infrastructure, because otherwise nobody will put a lot of, say assets into it.
Maybe take it from a different angle and just say a little bit of positive news in the market, right? Like everything we have seen last year, it just doesn't help. You've been talking now pre and post FTX, and there were many others as well. I think again, if that clears out, we have seen projects that had a good business rationale behind it are continuing. We also, an interesting part is we haven't spoken about DeFi, but there were protocols or lending protocols in DeFi that didn't go bust, while CeFi did. So do they have a better risk management, right? Closer to banks than others. But generally, I think some more positive news, some upbeat, and again, I think there's no barriers.
I don't want to simplify too much, but I think knowledge is key. So the more banks and financial institutions manage to build up the knowledge for all the departments, it doesn't have to be necessarily just IT, cybersecurity, compliance, and AML, but in general, like if the more knowledge will be shared within the financial institution, the easier will be also to create a better environment for the entire product or the digital asset world. The good thing about this is that lately there is a kind of a good exchange of employees between fintechs and crypto and banks, and this helps speed up this process, in my opinion, and it helps to build up a good knowledge, bring in the freshness, perhaps, or the news from the fintechs to a big bank, and all the other way around when a banker joins a small fintech to bring some structure. So it's beneficial both ways. So I think this exchange of knowledge will definitely help, and the more time we spend in this war, the more will increase.
Yeah, the more we go down, the more creative we need to get. No, I think to keep it simple, I think it needs to work, right? Like I think banking, great, it's table stakes. The security is table stakes. I think I think we've reached as we've discussed, we've reached a bar now where we're there. It needs to work, and clients need to get value out of the products that come out of this. And I think a point I made earlier, it needs to adapt. Right? Because what's required today, and we've seen tokenization wasn't really something we talked about that much a couple of years ago. We talked about NFT for a while, and then not so much anymore. I think this is a very volatile space. So I think the proof in the pudding will be, does it actually service client needs, and can it keep up with those client needs that are fast evolving? If you build a brick of a machine that's super tight security-wise, but doesn't evolve, then it's going to live a very short life, in my opinion.
Yeah, I'll maybe echo two things. One is I do think that traditional companies need to announce what they're doing. They're all working on projects, and they're all curious about what all their peers are working on, but literally all of them are working on projects. We support already over 50% of the largest banks in the world, of the top 10. Also 5 of the top 10 largest asset managers, and only one of those we were allowed to announce in the press, because their risk committees aren't comfortable talking about this yet. and they're all nervous using the word crypto. And so I guess that's my second point, is that crypto is not a bad word. And tokenization is just another way of saying the same thing. At the end of the day, it mostly uses the same technology, and it's going to change the future of commerce. And this is all just the path on how we get there, really, with all the great companies like these panelists today. So.
I like this. Yeah, crypto is not a bad word. Okay, I will definitely take this home. So thank you very much for this great discussion.